Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here, and I hope you guys are doing well. In this video, I'm trying to keep it quiet right now, guys, because it's really early in the morning. It's about sort of 5:30 in the morning right now when I'm doing this recording. My kids are asleep, so I'm trying to be a bit quieter. So if you're like, John, you're not as excited as you normally are. What's going on? It's like, because I'm trying to keep it quiet. But no doubt I'm going to start to raise my voice as I start to talk about these markets and what's going on right now, because it is so exciting. On one hand, it's exciting because when you start to see, right, when you start to see what's going on in the markets, all right, so here's your eyeball, all right, here's a little eyeball. And when you start, when the shine of the sun shines down on you and gives you the light to see clearly what's going on, you can start to build a very, very, very nice path to navigate this, as Dalio calls it, the big debt crises, right? So that's why I'm so excited. I'm going to talk about why the futures market actually plunged. Like, look at this here. This is the hourly bar. This is the 15-minute bar, right? This is the 15-minute chart. Look at this. Let me go back to this chart here, right? Look at this here. So as the market was closing, it went down, and then we just sort of just plunged, right? We just collapsed in the after hours, as you can see, and you can see like the closing price was very, very weak. The closing price was around about here. But then we had a very big plunge. So I want to talk about that. I want to talk about a video. Talk about some things about how Mark said that I think you're gonna really enjoy. Also going to talk about Ray Dalio. Some things I've heard. I've listened to him from as well too. Some things I've heard from him from a recent video as well too. Okay, and that's what I want to share with you today. So before I get started today, guys, let me just bring up this good old, let me just make sure this is on a slideshow. Guys, I'm giving away a free trading course. If you need help with your trading right now, then grab the $7 course. It is $7. And I literally give you a whole trading course here, guys, to get you started on the right foot. Especially, guys, if you are struggling with your trading right now, the biggest mistakes, you'll learn what the biggest mistakes you're making right now and how to overcome them, let alone amazing chart reading techniques, couple of trading systems, and so much more. You're going to absolutely love it, guys. Anyway, $7. I'm doing this just to help you guys out, so go grab it now. And if you'd like to get more of my coaching, then there's an upsell there, where you can grab a 2-week free trial to my coaching, where I can coach you every single month. So go check that out. And if you like the coaching, grab the upsell as well too. There's an upsell there. But anyway, let's get straight into today's market, right? So the futures market actually plunged, or the futures market actually, it's not showing there, is it? There we go. Okay, cool. So this is the hourly chart that's happening on the futures market, right? So we came down, we sort of made a lower high. Notice how we're making these lower highs through here right now. All right, on a technical basis, look what's happening, right? Lower high, breaking down. We're now breaking past these lows. Look, this is where the hourly bar closed here. So I wouldn't be too surprised, this to me, if I'm looking at it on a technical basis here, guys, that that this level through here has been closed. Again, this is the futures market here. And so I wouldn't be too surprised if we started to see next week a nice move down towards these lows through here, and then ultimately probably break that. And then I see, if I go back to my daily chart here for a minute, I ultimately see this thing probably heading back down. I'm not sure why the futures market's doing that there, but I ultimately see the market heading back down towards this level here, and same for the S&P 500. It's showing an up bar. I'm not sure why on the daily there. Must be a glitch, right? Because the closing price here is 30.58, and the closing price here is 31.61. So that's a bit of a glitch there. But on the hourly chart, as you can see, once again, you can see how we're just sort of flat now, and now we're breaking down. Very strong breakdown, guys. Very, very, very strong breakdown. This is probably going to be the start to see a movement on the downside. So we saw as you can see, right, we saw in the last hour, right, futures market plunge the futures market plunged after hours, and you can see how it just fell off a cliff here on this 1 minute chart here. So you can see that that's what's going on right now, guys. And I want to, in this video, guys, I also want to step back a much more of a larger picture on you and your investing and so on and so forth. And there's something that let me bring this up through to here. And let me see if I can get this up here. Okay, cool. All right, so this was really interesting, right? Because I was listening to this video here, all right, and this video here from Howard Marks, and Howard Marks was saying in this video here, you can see it, you can actually type it into YouTube, this one here, and what he was saying was that how he's made his best returns has always been going in markets when no one wanted to be in those markets, right? Now, I'm not saying that, yes, Hertz is bankrupt, so go buy Hertz right now. Well, who knows, right? Hertz could be an amazing buy, especially if they don't become bankrupt and then they end up making through it. Anyway, but what he was saying was that every single time people didn't want to do with the bond market, the debt market, which is the bond market, any market out there. And he said that's when he's made his best returns, getting involved with markets when no one else wanted to be involved with the markets, with that particular sort of instrument there. So, and I look back over time, right, over history, and that's where one of my earliest mentors, he actually was talking to me. He was actually saying, like in 2010, 2011, he was saying, listen, this is the perfect time to be buying US property, and no one wanted to be part of it, right? It's like, no one wanted to become part of it, and he bought up millions and millions and millions of dollars of these properties that just. Now, guess what? This property portfolio of his now has just made so much money these last 10 years since making that decision. His cash flow is enormous from those cash flows, and those decisions, right? Those decisions to not make a decision based on what's going to happen, what's likely to happen over the next, say, 1 or 2 months, but what's likely to happen over the next, say, 6 months or more. 5-6 years, maybe longer. What's likely to happen over that period, right? A 5-year period. I think if you start to look at that far out like that, and you start to make decisions now, you can start to do so well, right? And most successful investors, and we've heard it from Warren Buffett, right? So, when people are fearful, be greedy, and when people are greedy, be fearful. So, and he was saying that's whenever he's opened up different funds, he's opened it up at the worst time, and everyone said he's not to you serious. You're going to go into this market. No one wants to be part of this market right now. And he'd open up a fund, he'd start, and he's always made his best returns in those economic times when those instruments no one would become part of it. And it's just really interesting, because if I bring up, say, let's just go back to, say, the daily chart here for a minute, but. And when you're looking at that there, right, when in this situation here, when we're looking at that, the short-term swings of the cycle anyway, of the markets, okay, if we have a look at this down leg here, when did it seem the worst, right? Probably down through here, right? Look at the massive swings through here, probably down through here, right? And if let me close that off for a minute, and let me just bring up, say, that the normal let me bring up the normal Dow Jones, the cash chart. I was looking at the futures chart, and now I'm just looking at the Dow Jones cash chart, okay? And this is what actually happened on the cash basis here. So if we have a look at this here, okay, think about your investing long term. If you want to capitalize on nice profits, think about your investing as what Howard Marks was saying, right? It's like the best time to be getting involved with something when most people don't want to be getting involved with that. The worst time to be getting involved with something, and when most people want to be doing that, right? So, for example, when were most people talking about Bitcoin? 17, 18,000, right? Yeah, it shot up a little bit more, but guess what? Then it collapsed to 3, over a couple of year period. And that's where the bulk of money, the bulk of big wealth has been made from just understanding the cycles of, guess what? the markets, right? So when things are really, really, really bad, like down here, right? This is when World Health Organization came out and said pandemic, bad, right? This is when Donald Trump came out and said, national emergency, we're shutting down the economy, right? Everything seemed really, 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 really bad at this time, right? That seemed the absolute worst. This is so bad. And you see, right, and if you can do so well out of investing, right, just having this approach. But it's what is it? It's more of a longer term approach, right? Or it's more of when you trade in the markets like this, right, it's more of a shorter term approach. But if you're trying to capitalize on big trends, then it's understanding, okay, we had a big drop. When did it seem the worst? The time to buy was down here, right? And so for me, guys, I made a lot of money, right? And I'm not going to talk about dollar figures or anything like that because it doesn't serve you at all. Like, who cares, right? But I bought a lot of call options down here on SPY. So down, it was actually around about here, this point right through here. I actually bought call options, a lot of call options on the SPY. And I had a target of 300. And once we started the rally, I got out for a really nice profit. I also bought call options on Apple. Apple, for me, I got in on this right here. Actually, it was that day right there. As we started to bounce a little bit, I got in right there. I didn't know it was going to be the exact bottom, but all I knew was that I bought a December option, which simply means that I knew from this point through here. Let me just bring this, actually, let me do this here, right? So I knew from this point through to here, let me squeeze it up. So here we are here, right? I knew that from this point here through to this point here, which is December, this point here in time is December. That's why I got a December option. I knew we'd probably at least rally up and come and close this gap through here. And that's what happened, right? So we may have dropped down, but I knew we're probably likely to get something like that. So what I did is, and I was at that point that I actually then sold Apple, and I made a really, really, really nice profit on Apple. I also bought JP Morgan, and that was actually a small loss, right? So you can't win them all, but small loss on JP Morgan and so on and so forth. The purpose of me saying this, guys, is that whenever you're looking at, let me take that off screen. Whenever you're looking at the markets, understand the psychology of what's happening, right? Here was the time to buy. Most people are freaking out here, right? Guess what? I was loading up. Now, if you understand the psychology of what's going on right now, right? And if you understand what's going on right now in the markets, what is going on right now, right? If you just look at it from forget the emotional side of it, right? If you're bullish, if you're bearish, if you're long, like forget all that sort of stuff. Let's look at it from a logical point of view, okay? And if we understand that when most people are fearful, the big F, fearful, it's time to buy. When most people, like if I bring up Bitcoin, right? Let me bring up the Bitcoins. Let me bring up the Bitcoins, right? So if most people are fearful, and if I look at the Bitcoins, and so guys, you can start to really, especially you guys that are young guys, right? 20-year-olds, 25-year-olds, guys, please listen to me. Start to position yourself for these major swings and stop looking for that quick, that you can do well, but sometimes it takes a bit of time. I didn't know it's going to... Now, this move through here, I actually thought it was going to take a bit longer to get to where we are right now in the markets, but it happened quite quickly. But if I bring up the Bitcoins, let me just bring this up through here, right? So let me just squeeze this up here, right? So if I look at the Bitcoins, and... Okay, so look at this here for a minute, okay, guys? And I want you to listen to the similarities of happening with the markets itself, okay? So if I go back to my weekly chart here on Bitcoin, I remember Bitcoin back here. Yeah, let me go to the daily chart here, right? I'm going to squeeze my daily chart up, but I'm going to go back to the boom time, right? So back to the boom time through here. So as you can see, right, like look what happened here. And I want you to understand this thing for a minute here, right? When we have a big flash crash like we did right now, well, in the actual stock market, guess what? The market's likely to have some form of a bounce, right? Because it's so vertical down, we're likely to have some form of a bounce. We got that, okay? So most people are fearful. The time was buy when most people are fearful. Now, let's look at what the psychology of the market is right now and the similarities of what was actually happening with Bitcoin. Okay, so Bitcoin actually had a big, massive move up, okay? Big, massive move up. And then guess what happened? Guess what started happening through here? My brother-in-law started talking about it. My hairdresser started talking about it. I think even my gym owner started talking about it. You know, like everyone was talking about Bitcoin. Bitcoin's so amazing, right? And then, you know, and then they probably would have gotten Bitcoin here. It's like, yeah, it's going up. Yeah, it's going to continue going up. Even though it's like, if you guys understanding about the markets, right? The market is a breathing mechanism. And if the longer it goes, the bigger the move, the bigger the bust. Right? And so many people are getting in here, right? And that's what I'm just like, whoa. I told my brother-in-law, don't touch it, right? No, but even my ex-wife, she doesn't even know what a stock is. She doesn't know what anything is. Oh, I heard this Bitcoin Cash, and it's like, it's good to go, and I could put some money in there. And I'm like, don't touch it. And she's never thanked me, but hopefully she didn't put money in that thing. You know, she's like, oh, Bitcoin Cash. And I'm just like, this is a recipe for disaster right now, right? Everyone is talking about this sort of stuff. Everyone's like, this is the way to go, right? The herd mentality. And so guess what happened, right? They may say, oh, well, I'm missing out. Oh, here comes the bounce again, right? And if you look at this here, right? Big move up, big bounce, big move up. What does this look like here, right? What does this look like here? What does this here, guys, look like to you? I wonder why. I wonder if you guys have seen something. Let me just actually take this off the screen here for a minute. And let me bring this over here. Let's see if we can have some sort of similarities here, okay? Now let me move this over here. Let me squeeze it up a little bit more so I can get this screenshot in here. Look at this up here, right? Let me bring this up here. Look at this here. So we have the bubble, right? So what happens here, guys, right? So we have the bubble, big bubble. Look at this here, euphoria, oh my goodness, you know? Even guys at the gym are just like, I'm all in on Bitcoin. Oh, Bitcoin's amazing, right? Big boom, right? And then what happens initially, right? We get the first what? Boom, right? Big first bounce, big first crash. Over here, right? New paradigm, denial, bull trap, right? And then look what happened. Double bottom. It actually tested new lows and rallied. Could not break above new highs, could it? And then look what happened. And then it failed. This point right here is where? Oh, everything's returned back to normal. Bitcoin's going to go well, right? Everything's going to right? And so one of the things that I have learned so much, and I really learned this from Harry Dent, by the way. And when I started understanding bubbles in the markets, you start to see that these the bubbles in the markets, right? The bubbles in the markets, wherever they started from, is most of the time is where they're going to end back out when back up. So I learned that from Harry Dent, which is quite incredible. Now some of you guys, yes, Harry Dent's been off a lot, but you know what? There's still the thing about Harry Dent, guys, is that yes, he's been wrong a lot of the times, but if you dig deep through all that sort of stuff and actually it's okay, let's start to understand some of the stuff he teaches. There's so much stuff you can actually learn from him as well too. Okay, so yes, he's not probably good at market timing or market. Well, actually, probably a lot of people are not good at market timing. But the only way to be good at market timing, right, is sort of similar to what I said before today, which is like when everything seemed really bad with the whole the virus situation. Then that's probably the time to buy, right? And then, okay, probably over the next 2 or 3 months, we're probably going to start to get a rise. And when that happens, I'm probably going to do well. Look what happened here, right? We turned it on, and then look what happened. This is where isn't this interesting, right? Look at this here. Big move up, first trap off, and then rally, right? Look at this here. Probably big move up, first trap, and then rally. Not only that, but then it came down. Look what happened. It came down all the way down. It actually came lower, right, than here, right? Or this is actually down here. Look what happened, right? Came down to where? Just before the vertical spike happened, this is where it came back down to. But if you look at that there, right, that from the crash of 2008, it went from 6,000 up to 20,000 in a matter of probably a month, right? That's crazy. But then it took a matter of 2 months. What's that? December, yeah, right. Then it took a matter of November, December, January, February, right? So it took a matter of say 3 or 4 months, right, to get back down to this bubble through here. But we all know, right? We all know where Bitcoin actually ended up, right? Look where Bitcoin actually ended up at. And isn't this just and then we've had a big move now, and now we've started the new cycle, right? As you can see. So if I bring this up through here for a minute, look at this here. And let me bring that screenshot back up here for a minute. Where are you, screenshot? There we go, there, right? So look at this here. Isn't that interesting? Look at, if I bring this over here. Right? Isn't that interesting, right? Look at this. It's so like big move up and same, right? And that was the big pullback, and then we came down and we then we had a big crash through here. I actually made a really this sort of breakout bar was a fantastic trade on Bitcoin for me. And then we had to move down, right? Look where we are, back down through here, right? So then guess what? Now we're starting a new phase, and now that's the reason why Bitcoin is in a new phase right now. So look at that there, right? Look at this here. It's so similarities in the markets, right? But what was the key to the bubble? The key to the bubble was a few things. The key to the bubble was that we've had such a big move, but then not only that, but the main key to the bubble, right? The main key to the bubble was what? The sentiment around the markets, right? When most people are greedy, be fearful. So if I go and have a look, if I have a look at, say, the stock market right now, right? When we're looking at where we are right now, where is the sentiment right now? Okay. And if we have a look at this here if we have a look at this, let's just do, I'll stay here, right? So if we have a look at most people's sentiment right now, what is that? Bullish, right? As in, like, we've got, people taking their stimulus package in the markets. Trading accounts are starting to open up right now. You've got, if I go back to my last video, right? So this is my last video that I did just recently. And if you can see here, right, like there was a comment here, just, where is that? I was talking about here, and there was a comment here. There was a comment here that I mentioned in this video was about the hairdresser, right? Remember I said before about Bitcoin, right? Bitcoin, my hairdresser was actually talking about Bitcoin. That's the time to get out, right? Look at this here. Where is that comment? Let's have a look here. This one right here, right? Yes, look at this comment right here, right? Yes, Brad says, yes, the classic hairdresser is buying stocks technical indicator. I love that one, and you can see I loved it as well too. And then you can see here, that's what I'm out. Yes, but you must always confirm with multiple indicators, so you need to hear the taxi driver as well. He's probably in the markets as well too right now with his stimulus package, and he's just not saying it. Right? So guys, we're already seeing the writing is on the wall, right? Like, now, does it mean today is the exact high? No, right? We don't know, right? But does it mean there's a massive high probability that over the next, say, maybe couple of weeks, we're going to form more of a top where we are right now? We're going to see another big leg down? Yes. Right? And we saw that with the put call ratio, which means there's so many people buying calls, so many people are trading. It's just like, it's a recipe for disaster. And one of the things that Ray Dalio talks about within his big debt crises is the template, right? Is the template to understanding the actual, let's just see if I can do this here, right? The template to understanding his big debt crises. And you'll see throughout that template, right, that the template to understanding big debt crises is all about understanding the cycle of things. And so if you're looking for really, really, really good buying opportunities in the markets, right, just wait for the markets to, tell you that. And, and if I have a look at, say, for example, on this video here, right, so I was listening to on this video here that I listened to, I was listening to Ray Dalio, and he's talking about how that this is worse than the 2008 crisis, and the reason why was the 2008 crisis was a banking crisis. This next crisis we're doing right now, and we're at the end point right now, is that long-term debt cycle, right? It's not the short-term bull and bust cycle. But what is it? It's the long-term debt cycle. What is that? That's the debts. That's the government debt, right? It's getting to that point now where the government, the government's getting too big. The debt's getting too big, and how the debt's getting now too big? And we've heard that, right? Oh, massive debt, massive. But how do you know how do you actually quantify that? How do you actually quantify the debt being too big? We quantify that, right, of how much they can actually raise interest rates. So if I go to the United States Fed fund rate, you will notice, right, that, let's just actually go to maximum here, right? You'll notice that, let me zoom in a bit more, right? You'll notice that each time over the years, right, you can see how that they've only be able to, they only can raise it to a certain amount before they prick the next bubble. And look what happened here, right? They only could raise it to about 2.5%, whatever it was, before they prick the next bubble. That's when that's when the debt's becoming way too big, right? Because they only can raise it to a certain amount of point before the next bubble crashes. They only can raise it to the next center point before the next crashes. And look what happened, they're getting low. What's next? Right? A new world order, as Ray Dalio says in this video here. That's the reason why this debt crisis right now is so much bigger than 2008. Why? Because it's governments. A government, we know, right, over the last, say, couple of decades, it's like the government is a secure job, right? Like working for the hospitals and stuff like that. That's what people do, right? I want to get a nice, safe job, blah, blah, blah. Right? Guess what's going to happen to those safe jobs, those, hospitals and pensions and healthcare. And I heard just recently more than 50% of the Americans are actually government assisted right now. Government assisted right now. More than 50% Americans. Now, guys, put it this way. We know over the next 10 years, right? We have the next 10 years, there's going to come a point in time where if inflation starts to pick up and people start to spend, the velocity of money picks up and people start to spend, which is going to cause inflation, they have no choice but to start to raise interest rates to calm things down. And when that happens, it's all over Red Rover, right? Or it may be all over Red Rover right now. We just don't know, right? The amount of debt, right? They could just raise it up to, 2 basis points, and before you know it, it pricks the bubble. So right now, record number of people are in the markets right now. Okay, record number of people are in the markets right now. And the reason why this is bigger is because it's, the government and the bond markets and all that sort of stuff is so much larger than the actual stock market itself. And this printing of money is just the death knell, right? Is absolutely the death knell of that. And there's gonna be a new world order. There's probably gonna be a new currency as well too, or maybe it is a blockchain. And I'm pretty sure it's gonna be a digital currency over the next 10 years. That's gonna come into play. There's gonna be a restructuring of the US debt, and all sorts of stuff. It's riding on the war. And so people that are even Robert Kiyosaki was talking about this, right? That Who Stole My Pension? I think it was called the book there. I haven't read it, but I saw the title. Right? It's like that's what we're going to, right? And once the debt's coming too big right now, because how do we know? They can't even raise interest rates only a few percent before they prick the next bubble. Because right now, what's happened in the last 10 years, especially the last 10 years, or throughout time, guess what? This has been government assisted to lower interest rates, pump money, stimulus into the markets, and raise it, and more debt. And right now, we're getting to that massive, as Ray Dalio says, right, the long-term debt cycle. The short-term debt cycle, right? The short-term debt cycle is we have booms and we have a bust, we have a boom, we have a bust, we have a boom, we have a bust, we have a boom, and so on and so forth. Well, the long-term debt cycle is what? The long-term debt cycle is over the time, over these booms and busts, we accumulate more and more debt before we have to start to restructure that debt and before it gets too much. How do you know it's getting too much? Because they only can raise it a few percent. Because now we're getting to a point where they only can raise it now a few percent before it actually pops in the markets, okay? And so that's the biggest things that's going to be happening here. So it's going to be a major restructure. That's the reason why it's going to be so big. And for people that are relying, as I was saying before, for people that are relying on the government, and as I was saying before, that 50% of all the people, more than 50% of people in America right now are government assisted. That's crazy, right? Absolutely crazy. And guys, if I bring out the template for understanding big debt crises, and let me bring this up through here, okay? Look at this thing through here, right? And once we understand history, we can start to see this here. We can start to see what's happening moving forward. I'm going to bring you down to the 6 phases right now that goes into a big bubble. Okay. Applying the frameworks for the past bubbles. This is on page number 21 in Ray Dalio's Big Debt Crises. And so look at this here, right? Now, let's actually go through this here, right? Number 1, are prices highly relative to traditional measures? We know right now, we've seen indicators all over the place that the stock market is now massively overvalued, right? Massively overvalued, yes. Are prices discounting future rapid price appreciation? I'm not exactly sure about that, so I'm going to leave that alone there. What do you guys think about that? Are purchases being made by finance and highly leveraged? Yes, right. Leverage has just gone through the roof when it comes to even purchasing the markets, right? Are buyers and companies making forward purchases? I'm not exactly sure about that. I know buyers are, right. They're going out there and buying a lot of stuff right now with all their stimulus money, thinking it's going to be there. Actually, let's just do this here. Why did I do that? Why did they do that there? Right. So number 1 gets a tick. Number 2, not sure. Number 3, yes. Number 4, I would say yes. Number 5, have new participants entered the markets? Oh, this gets a big yes. This gets a double tick, right? Where we are right now. Is there a broad bullish sentiment? Oh, yes, right. Government's going to set back. This is going to be here. And does tightening risk popping the bubble? Well, that already happened, right? The tightening actually happened. You'll notice the tightening that actually happened in the last couple of years, right? They only got it to a certain point, right? And then guess what? When they had to drop it, that would have been the sign of what? The next crash to happen. And you can see now it's gone back down to 0. So I would say I'd give this probably a 90%. 90% of what we talk about here, and someone a lot smarter than us guys, and he's a lot smarter in the way of understanding the frameworks of all bubbles in history. 2007, 2000, 1999, all the way back, right? So the whole purpose of this video, guys, and I know I've talked a lot about stats and figures and all that sort of stuff, and what Ray Dalio is talking about here, and so on and so forth. The whole purpose of me talking about this here, guys, is just to try to give you a real massive picture of of how to navigate through what's happening right now, and how to think about these markets. So right now, the time to be bullish is not right now, right? Yet, does that mean we're not? Does that mean we're not going to see this in the next couple of days? No. But I would say there's probably a really good chance that even if we do get that, we're probably going to end up down here over the next 6 months sometime. Maybe the next 12 months. See what I'm saying through there? So guys, this whole thing is just to try to educate you and try to put some pieces together about when people are fearful, be greedy. When people are greedy, be fearful. Where are you right now? Understanding the cycle of things. Understanding why this crisis is so much bigger than 2008. And I hope you can see, guys, that overall, that when you start to understand these different little things in the markets, right, you can start to navigate through this here and start to do really, really, really well in the markets. But to do well out of these markets, as you can see, guys, the do well out of these markets is, one, it comes down when you're trading, right? When you're short-term trading, then it comes down to you having some sort of system that you're following, right? Because that's all we have, and there's a probability, and there's a win-loss ratio in that system, keeping your risk low every time, because there's no guarantees of making a profit on any one trade. But if you're trying to trade the cycles, right, like we saw just recently, the cycles of the markets, then you can start to see like where we're at right now, and and looking at the markets in that way. So anyway, guys, just a quick little reminder, guys. Just make sure before you go, make sure you head on down to grab that $7 trading course, johnsflashsale.com. I hope it really helps you guys out. All right, guys, I'll see you soon.